Great. Thanks again, Dave. Always appreciate the opportunity. And folks, again, I appreciate you attending. I know also being the last speaker, a lot of you are getting tired. There's a lot of great information here. So I probably won't go 40 minutes on purpose. I'll probably go about 30, but I will leave it for Q&A at the end for sure. Okay, so if you have any questions as you're going through it, let me know. Again, my name is Dr. Keith Wade. I've been teaching and trading for over 15 years now. I do have my PhD in finance. So I've always loved financial markets. And those of you that don't know me very well, you'll notice that a lot of the things that I do are pretty simple. I don't like to overcomplicate things. There's a lot of highly effective techniques out there that you don't have to have 16 indicators on the screen to figure this stuff out. So again, I appreciate you attending, and today we're going to focus on Bollinger Bands. Okay, Bollinger Bands are a couple things about Bollinger Bands. They're used many different ways, and one of the things I can tell you for certain is that with technology out there, Jake mentioned earlier, with computers and the different ways that we can find things now, it's made it much easier to find the data to make good decisions. And Bollinger Bands are one of my favorite techniques. I've been actually using Bollinger Bands for the entire 15 years that I've been trading. I use moving averages. I use other things as well. What I'm going to show you today is a really simple strategy that both of you, if you're not familiar with Bollinger Bands, I think it'll be fantastic. But if you are familiar with Bollinger Bands, it's going to be a little bit of a twist, because what most people do, I do a little bit differently, in my opinion, with Bollinger Bands. Okay. But first, let me just explain for those of you that may be new to Bollinger Bands. They're basically a type of price envelope that was developed by John Bollinger. And what I mean by price envelopes, basically defining upper and lower price range levels. Okay, and trust me, I'll get to pictures here in a minute. The Bollinger Bands are envelopes plotted at a standard deviation level above and below a simple moving average of the price. Okay, so I could really bore you with some of my finance background, but the bottom line is markets tend to consolidate and go in ranges more than they trend. And when you can see this on a chart, it makes it highly effective to find ways to go in both directions. Okay, my favorite trades are still trading with a trend when you get a resumption in that trend. Why? As Maria even mentioned, the trend is our friend. And when institutions are going one way, after pullbacks, your biggest moves are usually going to become in those large uptrends, okay, or downtrends. But during consolidation, which happens a lot in every market, okay, I trade all markets, futures, Forex, and stocks. And what I can tell you is almost everything consolidates more than it trends. Okay, so we can use Bollinger Bands as a really good technique to find when it's a turning point in those markets. So Bollinger Bands help determine whether prices are high or low on a relative basis. They are used in pairs, both upper and lower bands, and in conjunction with a moving average. Okay, so let me get to a picture here. Okay, so in this example, the upper band, okay, is basically showing you two standard deviations away from the middle line, which is the 20-period smooth moving average. Okay, and then the bottom line is two standard deviations away from the downside. And again, the theory is this: markets are going to go up and down and sideways, and so when they hit these upper limits, in this case, at some point in the near future, they're going to at least revert back to the mean, we call it, which is that 20-period moving average. Okay, so I'll call this as the mean as well, the average of that 20-period moving average. The middle is the mean. Okay, same with it when it gets stretched to the downside. When it gets stretched to the downside, at some point we know we're going to get that snap back to the upside, at least back to the middle. Okay, that mean, that 20-period SMA. Okay, that's how the markets work, no matter what you trade. Sometimes they can absolutely continue to go up this band for days, weeks, months, depending on your time frame you're trading. Whether you're, again, day trading, swing trading, investing, Bollinger Bands can be highly effective for this. And we're going to go over quite a few examples just to kind of drive it home, so that after today, after everything you've learned, you'll have a good understanding not only of what a Bollinger Band is and why it's effective, but then kind of a cool strategy I'm going to show you. Okay. But again, just remember, most markets consolidate quite often, okay, no matter what that market is. And that's how we can really take advantage using these Bollinger Bands, okay? So how I use it. So when the bands tighten, and what I mean by that is, let me back up and show you again. When you've gotten these really narrow channels, okay, somebody that might be more experienced is, say basically this is consolidation, you're waiting for a breakout, okay? But these narrow bands, I tend to stay away. Like if I get a scan, which I'm going to show you here in a little while, and it says, okay, you're 2 standard deviations from the mean, but it's really narrow band, okay, I'm not as excited about that because a narrow band just means that we're consolidating and it's going to break out one way or the other at some point in time. But when you have these wider bands like down here, okay, they're in this case, they're 2 standard deviations away from the mean in a wide band. More than likely, we're getting close to a bottom, okay? Again, I'm going to show you some techniques to try to figure that out, but my favorite time using these Bollinger Bands isn't during this consolidation here, but when the bands are wider, okay, like they are here, like they are here. So when the bands separate by an unusual large amount, which is what I'm talking about with the wider bands, that means that the volatility increased, okay, and an existing trend may be ending. And that's the key. We don't know when that's going to happen just by looking at a Bollinger Band. Okay, I do like to use several techniques. I'm going to talk about a stochastic, which is a really good shoe-in since Jake was talking about stochastic. Okay, but prices have a tendency to bounce within the bands, touching one band and moving to the other and so forth. And you can go back in your charts, no matter what platform you have, they should have Bollinger Bands at no charge, okay? And so you can put Bollinger Bands on it. It also helps you pick direction because when the Bollinger Bands are slanting up, you're in an uptrend. When they're slanting down, you're in a downtrend. It's very easy to really understand how something can be trending, okay? So again, what I do is I actually look for the snapback, okay? What I mean by that, let me back up again before we get to some more pictures. But to me, a snapback is when it's, in this case, it's going higher, right? Price here is going higher. It's stretched above that 2 standard deviation line, okay? It got up here, and then it starts coming down. So when it pierces that 2 standard deviation line, okay, that's when I'm then looking for that retraction. I'm not going to try to catch a top. I'm going to let it start rolling over, pierce that 2.0 standard deviation line. Then that's what I'm looking for, at least a reversion back to that mean, which is this middle line. Okay, highly effective strategy where you can just, you're in this case, for example, if you got in here, again, super simplifying this to give you just an idea tonight, you could put your stop right above the swing high, okay? So you have defined risk, and if you weren't okay with that, you could put it above here, but you have defined risk, and then as soon as you hit that middle period, that 20 period moving average, right, you can eliminate your risk, take some profits, or all profits depending on your strategies there, okay? Same thing here, started coming up, right, take your profits, maybe eliminate all of your profits then once it hits that top bar. A lot of times it goes from one band to the other. That's the way markets tend to work. Now what I've done is I've created a custom scan because when we're looking at Bollinger Bands, if something is 3 standard deviations away from the mean or 3.5, okay, I'm not going to try to guess when it's snapping back. I'm going to wait for it to snap back, okay? And that's what I'm going to start showing here in some live charts in a minute here, is I look for that snapback. Okay, I mean, I've seen stocks, go 4 or 5 standard deviations out before it makes it move back. What's important is to understand you got to be patient and wait for that snapback, okay? And this will be the, I look for the close, and I'll get into that, Chris. Great question here when we get to some live charts. Okay. So again, I look for it to at least go back to the mean, which is that 20 period. And a stop loss can be very simple, like swing highs or lows. Okay. And again, Bollinger Band works on all time frames. Okay. 90% of my trades is swing trading, daily charts, 4-hour charts. But absolutely, if you're day trading, smaller time frames, Bollinger Bands, it works identical. It's just the risk is different, right? All right, so let me bring up my charts for a minute. Okay, so you should be able to see my Thinkorswim charts. Okay, and this is the daily chart. So these candles a daily bar right now. Okay, and I'll go in some smaller time frames as well. But I like to show things other than just slides. So here's an example back here. We had earnings on Netflix back in January. It gapped up. Okay, so it went from, think about that, 500 to 593. Okay, so it pierced this. And by the way, one thing that I did do, I have my Bollinger Bands. So again, this is just Thinkorswim standard Bollinger Bands, but I changed it to 2.5 deviations. So in the examples I was given, it was 2 standard deviations. Now I'm going 2.5. Why? Because I don't need to have hundreds of opportunities. What I'm looking for is something that's stressed above 2.5 standard deviations, up or down. Then when it snaps back, there's my entries. Okay. So again, I use 2.5 standard deviations. You can use 2. You could change this to 3 if you want to go 3 standard deviations. I have found 2.5 the sweet spot. Okay. So in this case, this candle, it closed right here, right? So it's above, it closed above the 2.5 standard deviation line, right? So what I'm looking for is whenever that is, in this case, it happened to be the next bar, when it closes touching the bottom band or the top band or lower, okay, closing. So if it would have closed up here, it wouldn't have counted, okay? Then I want my scan to say, okay, this may now be an opportunity for you, okay? And in this case, if you got in here, you put your stop at the high, okay, your risk is pretty low, for a large reward. Now, in saying that, down here on the bottom, I have stochastics down here where I may want to wait for that cross before I actually take this trade, okay? And again, I'm not here to give you 20 different ways of doing it. You can just say once it crosses this, it stretches, it comes below the 2.5 standard deviations, it closes below the 2.5 standard deviations. I'm going to go in this case short. You can absolutely do that, but I won't do it if the stochastic were still pointing up. Okay, so I kind of have my own rule there. I'm a little conservative trader though compared to many. Okay, and if I did that, then you get into the next bar, you still hit it down to that middle band. But this can be very, very powerful. Here's one again to the upside on Netflix. So it came down, it pierced. Okay, now it closed above. Okay, so this is what will show on the scan right here. Kind of consolidated for a while, hit the middle band, went up. But again, this is what most stocks, futures, and Forex do, folks. They go up and down, up and down, up, 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 then they come down, up, up. Even in an uptrend, right, you have back and forth movement, right? We call those channels, okay? So here's a Forex pair. Just want to bring, this is, again, daily charts right now, folks. Kiwi US dollar. Okay, so here's an example where it's just been massive consolidation, then it broke up, right? And then you can see it closed above the 2.5 right here. Then the next bar, it came down and closed right here. So this shows up on the scan for a potential short play. So as a Forex trader, you can say, well, I might go in right away. I'm just going to put my stop at this high. I love recent highs and then breaking through that Bollinger Band. Okay, I love those. But regardless, in this case, we had these stochastic cross at the same time. So this was a no-brainer for me. I didn't have to, say, well, the stochastic is still heading up. I'm going to wait one more bar. Okay. And so, this was your entry. Take profits, partial profits at the mean. Okay, and then you can let the next ride until you many ways of trailing that. Jake had a great one as well. 3 moving average. Whatever you want to do to you just don't want to turn a winning trade into a losing trade. Okay, I love Hackenacci, but again, I'm not going to go over too many tools today to determine when my trend is now over and so forth. Okay. Well, let me just check here real quick if there's any questions. Okay, so again, this is the Forex pair off the daily. I'm just going to go over a few examples, then I'll let you pick some as well if you want to pick some to look at. You know, here's something like Tesla just recently. We had it go up above 2.5 standard deviations, okay? Then we had a close candle. So this is what shows up on the scan. The next day will show this close, okay? And we've had the reversion back, okay? Very, very common. Now, this is getting a little consolidated here. I do prefer it wider, you know, wider bands and so forth. Okay, but again, just showing you some recent examples is very easy to find. Riot, one of my favorite blockchain to trade, you know, it moved up so fast, hit a high, which again, you're starting to see that, right? I love recent highs. Then we have it fall down below that 2.5 standard deviation, okay? So where's the entry? At the open right here. The stop is right at the high. So that came close, didn't it, to stopping us out, and then it did its thing, okay? Now again, using a stochastic, okay, the red arrow right there, you know, was the same entry as when the Bollinger Band, it came down below that 2.5 Bollinger Band, okay? So you can use MACD, you can use stochastic. I love Laguerre RSI that I use, okay? But again, I wanted to just show you things that are simple and nothing you have to purchase there to look at your charts to see these type of opportunities, okay? Amazon had one recently, okay? Came up, closed, and now we have the reversion. Look at this one down here, same thing. And again, I just, right here, I just want to show you that even stocks that are usually, you know, heading higher, right? If you scrunch this up, right, Amazon's heading higher, you can still make money by trading when they finally break through, let it fall back, reversion to the mean, okay? There's a lot of reasons why it reverts to the mean. It's profit taken from institutions. It's retailer traders getting stopped out. It doesn't really matter. It just works. It does this over and over and over again, okay? Here's crude oil on the futures market. We had a recent high over here in March. Again, these are perfect opportunities, okay? When you hit a new high and you're above the standard deviation there, you have opportunities, okay? And it can happen over and over and over again. Let me go to a 4-hour chart. I brought some examples here on a 4-hour. So Facebook, here's a recent one where, remember, it kept climbing on, you know, had earnings, so it climbed, and now it's meeting the criteria, and we've had the reversion back to the mean and now to the bottom band on the 4-hour chart, okay? But you have to wait for those triggers, right? You see the red arrow down there? You have to wait for your triggers because it can climb up the band for days. On a 4-hour chart, it could take many, many bars before it's decided to make that retracement, okay? So you don't want to have to think about it. You want your indicator to tell you, okay, now it's meeting that criteria, okay? The spider, we had this right here. It came up, hit a high, right? You're seeing that correlation now. You hit a high, and now it's profit taking, okay? Very, very common, even in an uptrend. Same thing here. Here we had one, an area where it came down, stretched below that 2.5 standard deviation, and then it reverts back to the mean and higher, okay? What I love about these down here is this is in the direction of the overall trend as well, right? Those are my favorite. Absolute favorite there. Here's Tesla back on a 4-hour just to show you. Right here is a good one, okay? You just have to be patient, you know, and in any of your favorite trading instruments, you can find them on different time frames, okay? See, I had one on CRM, but I don't, oh, right here. So right here is a recent scan we had, right here. So now, you know, this is all for you to kind of take a look at over the next week, right? See how we're been in an uptrend on Salesforce. We had this massive, well, let's not call it, a pretty big move down, right? Now it's stretched above the band and now it popped back out. So are we going to head back up now, right? this is a great opportunity. You could put your stop right below this wick. So I mean, you're not risking that much, but if it works out, risk reward on here is fantastic, right? And you can do these all day long, these type of trades. Really, that's such a low risk, but yet I still think you're giving it enough room because, there's got to be a low somewhere. This is a nice wick. Remember, we've got the stochastics now saying, yes, we should head higher now, and it's meeting all those requirements. So that's when I wanted to show you that was a recent scan opportunity, okay? All right, so let me show you how I do it. So I got a custom scan. This is for Thinkorswim, okay, where this is D for daily, and I run the scan, okay? If you're, let me look at something like, just to show you, like the Forex market, FX. And let me go to the 1 hour. Okay, you can adjust this any way you want based on your technique. Okay, I'm gonna hit scan. Okay, so it has this Norwegian yen that's showing a 1 hour. Let me look at something else. Let me go to public and let me pick. Let me see if there's any futures on the 1 hour. No, none on the 1 hour. Let me go back to a 15-minute. Sometimes after hours it's a little goofy too, but let me see if a 15-minute. All right, so what I'm going to do here is let me bring up the VIX in this case. This is showing up on the 15-minute. I'm going to change this 4 hour to 15-minute. Okay. You can see we had it right here. Okay, right here. So it's basically closing below and then popping above that Bollinger Band, okay? That's super easy to find these type of opportunities, okay? That's half the battle is finding them, because after the fact, it's not going to do you any good, is it? Absolutely not. Is there anything that, so again, you can do any time frame you want. I'm going to go back to daily, hit scan. And what will happen is, so this is the daily scan on futures. Again, I can go to, let's say I want to do, I could do all symbols, but it'll take a few seconds here. Let's do all stocks, okay, off the daily. So what this is showing you is all stocks that had 2.5 standard deviations, that were greater than 2.5 standard deviations, that now come back within that today, okay? And this will update for stocks anyway tomorrow when the bell rings at 9:30, right? It'll refresh and get something new, okay? But if you were to go look at these, okay, you see how right here, this bar right here, it came above. So it went below and now it came above. Is this your new entry for midstream company here? Okay, but that's how simple it is. Okay, in fact, let me go to the right time frame. So it was actually the opposite, right? We were looking at, remember the scan, sorry. The scan is a daily scan in this case. All right, so it met its case. It hit a new high. Now it closed right below this 2.5 standard deviation. Are we going to get a reversion back to that mean now? Right? Probably, because we're also hit a new high. So I won't be surprised at all to see that come down. Okay. And again, you can run these scans on anything you want. Whether it's futures, Forex, your own watch list. That's how it can be extremely valuable. Okay. Is there anything, any time frame or any instrument somebody wants me to look at? Let me go in there and see if I can find any questions. No, I don't give greater or lesser. I just look at it, and if I don't like it, like if it's a really narrow band and it's triggering, I'll just ignore it then. Okay. So you want a weekly ES chart. Okay, let's take a look. So I'm going to type in the ES, which is the S&P 500. I'm going to go to a weekly time frame. Okay, so this was a nice one just because it kept breaking down. Okay, we hit a low and then it closed above. Okay, so again, by definition on a weekly, you can put your stop below that and then take profits here and then have an exit plan. Okay, so that's a beautiful opportunity. Now we're getting close to the short side. Recent high, on the weekly, but we haven't had any Bollinger Band breaks recently on that. Okay, but this was a beautiful one here in March. Okay. Oh yeah, Don, it's super easy. I have instructions on how to set it up, and I'm more than happy. If you struggle for whatever reason, I'd show you. No worries. Okay. All right, so great questions. Let me just say, so a couple things then. Let me go back to the daily. So I'm gonna go from weekly to daily. Okay, so as far as the way I take profits, let me give you a simple way of taking profits. Okay, take profits, put your order at the middle band, this 20 period for at least half of your trade. Okay, then once you hit that, move your stop to break even, and you can ride it like 2 candles below. Okay, that's an easy way. Okay, I like to use Hakanachi and some other techniques that I don't want to complicate things today. One thing that Dave has put, I believe, in the chat, every 2 weeks I have a weekly webinar I hold, and I show my tools, and not only I do it to kind of give you my ideas of what's going on in the markets. And again, I do all 3 markets, not just stocks. But then I show my tools so people can see them as well. Okay. But I think that's a great strategy. Is middle band, take partial profits, trailer 2 bars behind. Just don't turn a winner into a loser, because Jake mentioned again earlier, you're going to have break-even trades, but your 20% of runners can be runners, right? It can be huge runners, and that's how we make money in the markets. Okay. Yeah, I trade options, Don, absolutely, but the strategy is the same, right? I mean, no matter, you might as well go about 3 or 4 weeks out off the daily chart for your option play, right? Now, if you're doing a 4-hour, you can maybe 2 weeks. Again, it's really the difficult thing about options is everybody has their own tolerance, right? I like further out because they're a little bit more expensive, but I don't have as much time to kill. Okay, but yeah, when I say I trade stocks, 90% of my stock trading is via options. Okay, 10% are longer term moves. I call it my my lifetime holds type of thing, and then I trade futures and Forex. Okay, is there anything that anybody wants to see, any time frame on something else? Again, I purposely am keeping this relatively short, but I want to make sure I answer your questions and so forth. And let's see, I do believe though that Dave has the link to my bi-weekly free webinars as well. Okay. Euro US dollar 1 hour, sure. So let's bring up the Euro US dollar. Let me bring up the 1 hour chart. And again, the cool thing about this, right? So I'm going 20 days, 1 hour, is when this happened, like right here, it closed above, okay, and then it closed below this 2.5. So this will show up on the scan. You don't have to go find this. Okay, you can just look at all Forex pairs if you're a Forex trader. Look for when this happens, whatever time frame you want on your scan, it'll find it. Okay, so you put your stop right above here. Nice little trade, right? Nice little trade. Okay. Then right here, new entry right here. Kiss the mean right here, so you've eliminated your risk. In a perfect situation. Okay, so yeah, I don't have a problem looking at any of this, anything you want to pick, because it's easy to go and find you the most phenomenal opportunities you missed out, but this is live data, folks. I'm just showing you based on the strategy that I love to use at Bollinger. I've been doing it for 15 years. Okay. Yeah, I can look at SI. Sure. Did you have a time frame, or are you saying just pick one? So here is a small divergence. If you want to pick something like, you want to go back to the daily. Okay, let's see. We had right here. This would have not have worked out, and then we wouldn't have gotten this one because it didn't stretch enough to get that. Okay, then you got one here. This move here, and then not quite here. Right, it didn't hit that 2.5 standard deviation, so we wouldn't have caught this on the scan right here. Okay, this is a beautiful one. The problem here is it's very narrow. Okay, it's very narrow, and you had earnings coming up on that. So that's not one I'd be looking at either. Okay. Well, which time frame? So you know what? Since I've got a couple minutes, let me explain time frames. Okay. Me personally, I prefer the daily and the 4-hour because I don't want to be at the computer all day. I like to ride my horse, to spend time with my family. I got kids 14 and under. Okay. But the larger the time frame, usually the larger the stop, right? At least it should be, or you're just going to get stopped out, right? So what you need to look at is, one, if you're working full time, you have to look at the daily or weekly. Okay. If you're working from home, or you can look at your computer all day, as an example, let me bring up the NASDAQ. Okay, everyone loves the NASDAQ, right? I mean, you can look at something, like you don't have to go crazy. You can do a 15-minute, okay, and wait for the opportunities, okay? And let's see if we got something back here. So here's a kiss right here, and you had the move. You just don't know how big the move is going to be. You take profits there. So, it depends on what you have to be okay with your risk. Again, going back, quoting from what Jake said earlier, you have to have a wide enough range to accept the risk. Okay, I always say assume you're going to lose it. And if you can't do that on a daily time frame or a weekly, then you have to do it on a smaller time frame. Some people love to day trade, some don't. Okay, but that's how you pick that. Here's another one right here. Okay, back to made profit on the mean. Okay, so yeah, it definitely really depends on your tolerance and so forth. And I'll talk more about that on my every other week live webinars on Wednesday. Okay, I do those in early afternoon, and I record them and send them out to anybody that registered. Okay. And there's a lot of information. You guys having 4 or 5 speakers in one evening is a ton. Sure, TLT on the daily. Let me bring up TLT. And let's see, we're on the daily. So let's see, on TLT, it's been one of those, it never pierced. I guess it pierced here, okay, and did this right here. It had some small divergence, right here. TLD has really not been moving that much. Right here was another one. But when it happens, again, it'll show up on your scan, and then you can decide, like, this was wide enough, and be like, well, yeah, I'm going to at least get it back to that mean, right? Make sense? AMD on the daily, sure. We had a nice one here recently, right here. Okay. We have one right here. What happens, folks, again, you got to remember what happens when it's overstretched, especially when it's wider. This is a nice wide band, okay? What's happening, especially at highs, okay? Again, institutions are taking your money here. They've made enough. Retailer traders have been blown out because they keep trying to short the market, okay? And then it goes down. That's just the way the markets work. You got to get used to it and think like an institution, okay? Yep. And if you're looking for smaller time frames, let's say the 4-hour, okay, you got one right here on AMD to the upside, so yeah, you'll find them and they'll show up on the scans. What you can do with the scan too, so let's say you do it in all stocks for today. The cool thing about Thinkorswim, you can save the query right here. You could call it like May 4th scan, okay, whatever you want to call it. Then you can bring it up over here. So then you can go back and look at past dates as well. Okay, it's pretty cool feature. Okay. Okay, are there any other questions? So with that, folks, again, if you go to seasonalpro.com, you'll see like a little bit down the page where you can sign up for my bi-weekly webinars. And again, if you can't attend during the day, I record them, send them out. You get to see kind of some of the other things that I use, but I think Bollinger Bands are fantastic. And for one, you don't have to pay for Bollinger Bands, okay? If you want the scan, let me go back to my slides real quick. Bear with me here. All right, slideshow. Okay, so if I go back to the slides, what I'm offering right now in these is this. The Bollinger Bands scan, which again you can use on all time frames, all markets. I basically give it $100 off. So the launch special was $299. Now it's down to $199 for you folks. Again, the link is in the webinar there, and it'll also be out in the recording. But again, it's just something that's really useful. The other thing here, folks, again, my bi-weekly webinar here. Sorry, I hit the wrong button. Let me bring that back up. Sorry about that. Bi-weekly webinar, which right here. I also have a YouTube channel and all my other information here, which again will be on the recording here. But it can be super helpful to kind of see how I use this, stuff every couple of weeks. And I have trade of the months that I like to do and things of that nature. So, you know, enjoy that free materials. Reach out to me if you have questions. That's actually my cell phone. Okay, I'm not out hiding. Again, I do this for a living. So when you make money in the markets for real, you know, you have nothing to hide. So go in and watch some of my YouTubes. Reach out if you have any questions. Other than that, again, I appreciate everybody's time. Jose, you had a question? Did I miss it? I don't see a question from you. Now, right now, this scan is just for Thinkorswim. Yeah, just for Thinkorswim. All right, well, if there's no other questions, link last one here. Oh, Dave, I think you have that weekly webinar I sent you an email. Do you want to, can you grab that? Or if not, let me grab this and then I can paste it in there too. Let's see. Does that go to everyone? If not, maybe you can transfer that, sorry. But yeah, here's the link to my webinar registration right there. Okay. And if you go to, I guess I've got a minute here. Let me just go to, you go to my website, seasonaltraderpro.com. Again, the main page, if you just scroll down, the weekly market analysis, and this time of year, it's twice a month. You can subscribe right here. Okay, and that way you'll get that information. And then you'll learn a little bit about me as well on that. So seasonal trade, www.seasonaltraderpro.com, and then just scroll down the market analysis. And if you're wondering, you know, Thinkorswim or TradeStation stuff, you can see that all there. All right, well, thanks again, everybody. It's been great. Appreciate you hanging on there, and everybody have a good evening.